Hello traders, the title of the video is how to trade the beast Dow Jones Index like the masters. Do you want to trade the Dow Jones Index like the masters? Alright, you are the right place and also at the right time. And we're going to share with traders technical trading tips and tricks that one can use to tame the beast of the Dow Jones Index. Let's get started, alright? So, few months ago, we have recorded a video about trading the Dow Jones Index, and I was telling traders that we have a round bottom here, and we will measure the depth of that round bottom, and we will project it above. Oops, have I changed something? Above the neckline of that round bottom, which is the blue horizontal line here. And as we projected that target, that measuring stick, we had a target at the 21691 zone. That zone now, 21691 zone. There is a target there. At the time when I recorded this video, you can see that the Dow Jones, last month hit the target, is now above the target level. Alright, so talking about how to trade a beast, the Dow Jones Index like the masters. So the professional traders, the masters of the Dow Jones Index, know that we are now above that target level. So what do we need to do? What do we need to look for? How do we trade the beast of the Dow Jones at this juncture? You have to understand that the financial market is becoming highly sophisticated market because a lot of trading algorithm, trading software, all kind of highly sophisticated trading tool are active in the financial markets. So if you are trading the Dow Jones Index, you want to trade the Dow Jones Index like the masters, you want to understand the tools, the technical trading tools that the masters are using. Alright. For those reasons, alright, I want to draw your attention to the red trend line that I draw on my chart, this one here, connecting this point and this one here. So there is a high. For April 2010, we connected to the high or to the closing price of April 2011, right? Right. So once we connect those 2 points, we have the red trend line. I want you to pay attention to carefully because I have other line on my chart. So this is the line that we are watching, the red line that we are watching. Follow my cursor. Here we are. We are now coming in closer and closer to that red trend line, connecting the high of 2010 and 2011, April 2010 and April 2011, allow us to draw that red trend line. We are now, after we exceeded that bullish target, the price is now approaching, so to speak, coming near that red trend line. So why do we need to care about that? Because the Dow Jones masters know that there is a trend line here, and that's why they prefer, if they want to sell, they will not sell at that target level. They will prefer to sell on the edge of the red trend line instead. Doesn't mean that they will definitely sell there, but it is a better place to sell if one wants to sell instead of selling at this target level. All right, and the computers, the high frequency traders, all right, the speed traders, the trading robot, the trading software, all right, all those highly sophisticated trading tools are aware of that red trend line. All right, in order to trade the Dow Jones, that are called the beast, all right, like the masters, one should pay attention to that red trend line. All right. Another thing that I want to highlight here, there is another trend line that I want you to watch carefully. Recently, Few months ago, the Dow Jones was coming down. People say that the market will reverse. The market will reverse. The market is becoming bearish as it hit the level of 21092. Remember? So last 3 months, you see there was a bit of pullback here. People say that reversal, the market is going to come down. Market is going to come down. Well, the market will only come down if the price signal to us that it's about to go down. All right, or if the price start exhibiting a bearish chart pattern. All right, so it's not because the market has been going up for too long, therefore it can continue to go up. The time that the market will reverse, those who are focusing on the price action will know. They will see a bearish trading setup, and then they will implement a top-down trading method to trade it. All right. So as we were at this resistance level, the price was pulling back. Why the price was pulling back here? All right, that's what I want to show you now. So it was at a resistance level 21092, and it started pulling back. You see, find support on the edge here. I want to draw your attention to that pink trend line connecting this low here. Which one is that? March 2003. If you have it on your chart, okay, that low, March 2003, and which one? The other low and a high here. So March low of March 2003. We connect it to the high of December 2014. Okay, March 2003 to December 2014. We connect the high here, and we allow us to draw that pink trend line. So recently, pay attention to the pink trend line if you want to trade the Dow Jones, the beast, like the masters. Recently, you can see that the price you see here as it came on the edge of that pink trend line. Now you may wonder, how come people know that? Why the price reacting around those trend lines? It's because the computers draw many trend lines. Okay, the trading algorithm can draw as many trend lines, hundreds, thousands of trend lines on any time frame. And they can make decisions on the edge of those trend lines. Though you may think that, oh, it's too much hard work for human beings. It's a very easy, it's a piece of cake, so to speak, okay, to algorithm, all right? The algorithmic trading, okay, tools out there. The price found a resistance on the edge of that peak trend line that we have drawn. It breaks above it bullishly. Now hit that resistance at 21092. What was going to the mind of professional traders? So you know what the price doing all the time? Break above, they want to retest. Couldn't retest it. Now, which means people are buying more and more. Another thing I want to highlight here, you see the pink line and the black line. All right. So I will talk about the black line also very shortly. All right, it's the edge of the pitchfork tool. You see the black pitchfork tool here, connecting 1, 2, 3. Those are 3 points. Allow us to draw the pitchfork tool. I had it here for some time. I just changed the color of it, but it has been here for some time. All right, I colored it before into red. Traders that are foreign, as you know, into red. Now I change the color into black. So recently, you see the black. Another thing I want you to understand here. There is a reason why the price also couldn't touch the pink line. What I was telling traders at the 24 Stock Trader YouTube channel, a channel that I promise to make amazing, channel that okay, I will do everything okay to make sure it becomes an amazing channel. All right, I was telling you that anytime we have two trend lines, we can also draw what the median line between two trend lines. So you see the black trend line, which is the lower end of that black pitchfork tool, and that pink trend line that we have drawn. All right. You see, if we pay attention to the median line between those two trend lines, is the blue line here. That blue line dividing those two lines, that angle is to 2. You see, price pull back after hitting that level of 21092. Okay. It pulling back, it retest the median line between the two trend line, which is the blue line here. So you may say to me, George, how can we think of all this? Now try to start thinking like the computers, the algorithm, okay, algorithmic, okay, trading tool out there. Market is becoming highly sophisticated. Computers are faster than human beings, than the technical traders. Therefore, in order to trade the beast, the Dow Jones Index, like the masters, right, you have to start adopting the mindset of the trading computers, so to speak. All right. All right, so you see what's going on in the financial market. So now we are heading to the red trend lines. All right. Another essential thing I want to mention to traders, very, very important point. I want to draw your attention to this brown pitchfork tool. All right, this one here. I have two pitchfork tools on my chart. One is brown, one is black. All right, here it is. So originally, you can see that the price was going up in 1982, all the way to 1999, where you born that time. All right, so and then we have this pullback. Then we have, okay, 1, 2, 3. We draw the pitchfork tool. So the pitchfork tool allows us to determine the possible path that the Dow Jones, the beast, is likely to take. You will notice that from after the financial crisis of 2008, 2007, it popped below that brown pitchfork tool. This is a significant event. So it became bearish and it stuck below that pitchfork tool for some time. From 2008, is stuck below the brown pitchfork tool. This is a significant event. The market sentiment became bearish, and then the market started going up in 2009. It retested, okay, came quite close to that brown pitchfork tool in 2015. So it break below it, and suddenly, slowly, this is what we are saying, break below, and gently, it tried to retest in 2015. Now, recently, we have another major event right here. It goes back inside that bullish pitchfork tool, the first one here. So what is going on now is that the market is now resuming its prior bullish trend. It's becoming very, very bullish. But if you are a die-hard bullish trader, understand that the market will not go up forever. So there are technical traders out there, investors out there that always expect the market to go up forever. It does not go up forever. It doesn't go up forever. There will be a time when the bell will ring and we will call it harvest time. Like the farmers, people will take profit and the price will come back down. Stock will become cheap again and the people will buy again, another sowing season. And the price will go up again. By the time when the price is coming down, people will say, oh, bearish trader, why anybody should sell? Oh, why? But the market will go up and will go down. It's a cycle and it's normal. So for those who are dying hard bearish traders, bullish traders, as I'm mentioning that bullish pitchfork tool, we are back inside it, okay? So there's something else I want to show you now, okay? Another thing I want to show you. I want to refer you to a video, an essential video that I posted recently. Hopefully you have watched the full length of that video. In fact, that video will be released today at 11 p.m. London time. That's 6 p.m. Eastern time at the Pro Traders YouTube channel, all right? So if I'm saying today is the 1st of August 2017. So if you are watching the video 100 years later, all right. All right. So the title of that video is Fibonacci Trader Reveals the Magic of 138.2% Fibonacci Extension. Check it out, okay? Fibonacci Trader reveals the magic of 138.2% Fibonacci extension. So what we're going to do, I'm going to apply that strategy that I discussed in that video here, because the price has now exceeded the target. Which level should we watch to trade the beast, the Dow Jones Index, like the masters? If the financial instrument refer you to that video at the Pro Traders exceeded the target level, all right, professional Fibonacci traders, the masters of the beast of the Dow Jones Index, will apply the Fibonacci extension to the length of the target. So this is the length, you see here. This is the length of our measuring stick as we project it here. Now we apply the Fibonacci extension from here to the target level, and we highlight which level, the 138.2% Fibonacci extension level applied to the length of our measuring stick above the neckline. So, for die-hard bullish Dow Jones traders, okay, stock traders, all right, we are now above the target level, okay. Ahead we have the red trend line, the median line of the black pitchfork tool, and other key resistance ahead. So there is a bit of, there are more to go, more for the price, more resistance to break before we reach, okay, the 138.2% level. What usually takes place, understand this, if you want to trade the Dow Jones, the beast, like the master, understand this. If a financial instrument hit a target level, all right, which is normal, that's why we see a bit of reaction here. Those who bought the Dow Jones Index or the components of the Dow Jones Index, when the Dow Jones Index exhibited a double bottom chart pattern here, all right, they are position traders, some of them swing traders, and they were pushing it. They know that there is a target at a 216.91. They know there is a target. So as the price was coming quite close to the target level, they remained a trade for since 2016. All right, they were getting a bit high. As the price came quite close to that target level, they took profit here. Price tried to retest the pink line, but did find a support at the median line between the black line here, black trend line here, and the pink one here. But you can notice that some people did come out here. I will do exactly the same thing because those are cautious traders. They know that the target is here. They want to come out. They don't want to come out exactly at the target level. They are happy traders. They have made their money, position traders, swing traders, and so on. So they came. Some of them came out here. But there is another group of smart traders, okay? The big market players, the hedge fund, the big financial institutions, sometime, all right? Price hit the target level, they want to sell and go sometime, all right? Not always. Sometimes they want to sell and go. Instead of selling exactly at the target level, all right, they will apply what I'm showing you here. The Fibonacci extension applied to the target level, and they will highlight the 138.2% level. So though the price hit the target level, a lot of people try to sell here, blah, blah, blah. And you will notice that also on Twitter, on Facebook, blah, 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 people will start talking about the market coming down. There are other reasons why people are saying that the market is going to come down, the market is going to crash. But the smart money, instead of selling here, they will instead place orders here to sell at 138.2%, the most powerful Fibonacci extension level, all right? They will place orders at 138.2% Fibonacci extension level, okay, here. So somebody may say, Joe, how do you know all this? Are you releasing confidential material? No. That's because I keep my eyes wide open, looking at the chart, spend too much of my life trying to understand the financial market. That's how I know all this, all right? So that's it. So well, here, so you can see here, so the orders will already be placed here, waiting for those orders to be filled at 138.2% Fibonacci extension level. It is a market manipulation? No. Anybody can come into the market. So those are okay, big market players, we place orders at 138.2% level to sell right here. Those orders, because of those orders, the price will try to fill those orders. Market maker must fill those orders as the price is going up. So the point I'm making here to trade the Dow Jones Index like the masters at this junction, we are now at a target level. Be careful. Price can quickly come down. So don't ignore it. Don't get too excited. Remember that the red trend line can come down, but be aware of the 24670 level. That's what I want to mention here. Be aware of the 24670 target level. Okay, that's the 138.2% Fibonacci extension applied to the length of the measuring stick of the profit target. Very, very important key level that a lot of ordinary traders, retail traders, beginners, okay, even experienced traders are not aware of. So people start shouting the market will come down. Watch the level of a 24670 level, all right? And also, as I told traders, anytime we have two significant key level, we can draw the median line of those two significant key level. As I'm talking to you now, I was telling you about the initial target at a 21691. Note it down, write it on your wall if you want to. And also the 138.2% level, 24670. We will, like the masters, anytime we have two significant key levels, we want to be aware of the median line between the two significant key levels. So there is another median line between those two significant key levels, which is the level of 22997. Are you feeling like the masters right now? Another thing I will mention to trainers at this junction before I close the video, because I don't record video very often about the Dow Jones Index. Why? One of the reasons is that when you post a video about the Dow Jones Index, you hardly get views for it. So every day I don't record video about it. Though I know that some of our subscribers trade those stocks. So once in a while I record video about Dow Jones. All right, maybe we get 50 views or 75 views. So I'm not going to spend my time and record a video about a subject that has not generated enough view. All right. So, but when I'm recording video about Dow Jones, I give enough information. I make sure I give all the information, so those who are trading the Dow Jones can come back and watch that video as many times they want. If they want to get more information, they can replay the video to get the information that they are looking for. All right. So before we wrap it up, all right, as I told traders again, is that anytime we see the intersection between, any part of the pitchfork tool and any horizontal trend line, any horizontal key level or trend line, those levels are hot spot trading zone. So on this chart now, we have many hot spot trading zone. And if you are day trading, swing trading, position trading, trade at a hot spot trading zone. There's one here, the intersection between the top of that pitchfork tool. There's another one here. Highlight those hot spot trading zone and know that we usually see a surge in trading volume at a hot spot trading zone. We see increase in trading activities at a hot spot trading zone, or at a hot spot trading zone. Very often this one here also attract the price. Right, so those are hot spot trading zone that day trader, swing trader, position trader must watch. To avoid drawing too many lines on my chart, be aware also about of the media line of the brown pitchfork tool. So we are now back inside that important brown pitchfork tool. Be aware of the media line of the second half. Are you with me? This is the second half of the pitchfork tool, and the blue line that I'm drawing now is the media line of the second half of the pitchfork tool. And again, we see intersection between the red line that we have drawn first and the media line of the second half of the pitchfork tool right there. All right. So, okay. Very, very important key level to remember: 24670, the 138.2% Fibonacci extension level of the length of the target measuring stick. Very, very important key level. Remember that. We have the target, we had a previous target at 21691. The price now above that target level. That's the orange line right there. Attention to the media line between the orange line and the red line at the 22997. Attention to the pink trend line that we have drawn and also to the red trend line that we have drawn. Remember that the price back into the original pitchfork tool, which is making Dow Jones, the beast, very, very bullish at this junction. Practically speaking, the most influential market participant will prefer the price to reach the level of 24670 before they will sell. But if we go into the mind of earlier wave traders, as I've done it before, we counted the first wave, second wave, third wave, fourth wave, and the fifth wave on a monthly chart. You remember that? If you are subscribed to 24 earlier wave YouTube channel. But this wave count, I need to mention trader from here all the way to this wave point. We are now in the fifth wave on the monthly chart. But to remind quickly, earlier wave trader, we have a higher degree wave count in place. And I will be recording a video that I will post at the 24 earlier wave 2 channel when we will be analyzing the Dow Jones Index, the beast, using the area wave principle. All right? You have any question or suggestion or comment, please feel free to put in the comment section. And in due course, I will be recording another video to answer your specific question. If you find this video truly useful, all right, let us know by giving us a thumbs up. Or if you want us to record more videos about Dow Jones, let us know in the comment section. Your interaction is very important for us. All right? And we will be posting videos about subjects that traders do care about. So I read the comment, I see the interaction, and those are the video I will be focusing on. All right. If you think that, George, by the way, this is a useless recording, well, feel free to let us know by giving us the thumb down. That will put us under pressure to improve our next recording. If you think that this is an essential tutorial for indices traders, for Dow Jones masters, for technical traders that are trading the Dow Jones, feel free to share with your friend on Google+, on Twitter, and also on Facebook. This will conclude our discussion today about how to trade the beast Dow Jones Index like the masters. Happy trading to you all, and speak to you soon. We are the TSTW24 traders talking about how to trade the beast Dow Jones Index like the masters. Happy trading to you all, and speak to you soon. Thank you for watching.